What a week we had. Bitcoin hitting new all-time highs, and we're going to break down everything that's going on. We're going to look at some on-chain data. We're going to look at what data released this week economically, which is not that much, but doesn't really matter. So we're going to do the same thing we always do, which is start off with the Bitcoin macro liquidity and regime tracker, which is my trading view indicator here on the bottom. And not much has changed this week. Only thing I added here to the chart itself was, everyone loves the global M2. It's been super tightly correlated with Bitcoin's price recently. So I figured why not add it to the actual chart so we can have some fun with price projections and all that good stuff. The one thing I want to note though here is it's been tightly correlated since basically December of 2023. So throughout all of 2024 and into this year, it's been super tightly correlated, but that is not always the case, right? If you look back in time, there's other things, right? There's other macro events that can move the price. It's not always just M2, but for the last year and a half, it's been incredibly accurate with all these moves. And I remember earlier this week when everyone was kind of disregarding it because we were chopping around from 105 in the 105K zone, that M2 doesn't work anymore, et cetera, et cetera. It's not prescriptive, right? It's not going to be perfect, but it should give you a general idea of where price is going to go until this correlation breaks again. So with this one, you can see, going into October of this year, it looks like 150K could be on the table. We'll see what happens with this move. Obviously, we broke out overnight. We touched 118, I think even maybe higher. Yeah, almost 119,000. So the price action, super bullish. Nothing's changed on the liquidity regime tracker just yet. Everything still looks good. We're in the upper zone, which is bullish. It's come off a little bit, but I expect this to turn up going into the end of the year, mainly because I do expect the ISM to finally get out of this sort of zone here where it's been just completely, this is actually the longest the ISM's been under 50 for a sustained period of time in a long, long time. Like this has been the longest it's been sort of tightly wound under 50. If you look back at this, now remember, this is a monthly chart. So this is going back to 1980. And you can see this is the longest amount of time we've spent sort of sub 50. Once this breaks out, all hell's going to break loose, in my opinion. We have the CPI. I don't actually use this chart. This is just literally up only because it's inflation. This is basically just the debasement of currency over time. You could see this is also from the 1980s, goes all the way back. What I do for my indicator is I take the year over year change so we can get good inflection points of where inflation is percentage terms. M2, obviously we had 2020, which was COVID, which had this insane money injection that kind of topped out in 2022. We came back and now we've based and are ripping higher again. And we've actually broken the all-time highs a little while ago. So always good to keep an eye on that, but this is not going to change. As long as there's inflation and federal budgets and spending and all this stuff, they're going to just keep printing money. So I don't expect this to change anytime soon. So that's what it is. This is China M2. So same thing. They're just printing nonstop over time. Chart go up, right? The dollar found some support here at 96, but still clearly in a downtrend. And then we got the RRP and TGA. This is the TGA here. So there's been some spend down. At the end of the month, you'll usually see spikes. Same thing with the RRP, down completely from the highs of 2.5 trillion back in the end of 2022, beginning of 2023. So all very positive, no complaints there. Now we can take a look at some of the data. And what's interesting here is, we will go over what happened this week, which was not a lot. You had the FOMC meeting minutes where a lot of the members of the FOMC are starting to get a little bit more bearish, meaning they think that they should be cutting. That hasn't actually showed up in the probabilities for Fed cuts yet, but we'll get into that in a second. I did want to touch upon the only release this week, really, which was unemployment claims. So unemployment claims measures number of people filing for jobless benefits for the first time, right? It's basically a real-time pulse on labor market stress. And this week's print did come in lower than expected. signaling that the US labor market is still kind of annoyingly resilient despite kind of tightening conditions, especially in the beginning of the year. It's not great news for liquidity, but because that strong labor market means that the Fed can keep kind of pretending that things are fine and delay the printer, right? The inevitable printing. But here's the kicker to this. So while the number ticked down slightly, it's still elevated compared to mid-cycle levels. And that's the slow bleed that the macro cycle needs. Until jobless claims kind of spike above 300K, risk assets won't get full throttle liquidity, but we're kind of inching there, right? Bitcoin doesn't want a recession, but it wants the fear of one, right? This print keeps us in that sweet pre-pivot kind of no man's land. You can see the chart over time. So again, I don't really take too much stake in unemployment claims, but that is the number. That is what it is. Next week is going to be a big week for data releases because you got the CPI, which is the consumer price index. It measures the average change in prices paid by consumers for goods and services. It's basically the main gauge for inflation. And the forecast is up by 0.2%. So we'll see where it actually comes in. Even the year over year is up. And for the PPI, also important because it tracks the changes from the perspective of producers. So people producing the actual goods and what businesses are paying for raw materials before they hit the consumers. Same thing, it's up a little bit. That's not great. We'll see what the actual print is next week. But when this runs hot, right, it gives Fed the excuse and Jay Powell the excuse that, inflation might turn back around, so we need to keep interest rates where they are. We'll see what happens. Then you have at the end of the week on Thursday, core retail sales, and unemployment claims. I'm not really too worried about the end of the week. It's more what's going to happen on Tuesday and Wednesday. Also, it's important to note that I think it's crypto week next week, White House. Let's see if that's actually a thing still. Yeah, so July 14th is crypto week. This is the actual government website, financial services. So they're going to be talking about the Clarity Act, which is CBDC, Surveillance State Act, and the Genius Act. So we'll see what happens with this. It's interesting that the price broke out before this. It makes me kind of put on my conspiracy hat of someone knows, right? Someone always knows. There's always insiders. Is insider trading illegal? Yes. Doesn't mean it doesn't happen. So do they know something that might be released next week? Perhaps. And if there is something bullish that is released during quote unquote crypto week, it's probably sell the news type of event because it's already priced in, right? Everything's sort of already priced in. That could be why we've seen a major run up, not just obviously global M2 and everything like that, but you have to look at the macro data, like the year over year, the month over month stuff, and get a general idea of where the direction's going. Everything else in between is sort of just noise, unless you're trading, right? If you're actively trading, like short-term trading or swing trading, then you obviously want to pay attention to the noise. But for what I'm doing, long-term cycle investing, doesn't matter to me. So anyway, we'll look at the Fedwatch tool, and this has not moved an inch. I think it actually went down a little bit in terms of they're not going to cut at the end of July this month. So it's basically priced in that the Fed is going to stay where they are in terms of interest rates. Again, for December, which is the end of the year, it's 15% that they still might stay where they are. I doubt that's going to happen. It's more likely that we'll be in one of these two buckets by then. And again, for September, it's a 60% shot that there will be a cut, but we'll see how these numbers change over time. This probabilities table has not changed really at all. So whatever, that is what it is. We'll see. I'm not really that concerned about interest rates. The Fed's going to be late no matter what they do, and it's probably already priced in anyway. So we'll take a look at my spreadsheet. I have not made any changes to this, although I am working on adding some one or two indicators here that I'm testing out currently. So they'll probably be in next week's video if I think that they're worth having and that they make sense. But otherwise, we're still 98% risk on like we were last week. The week before that, we were 104% risk on bullish. So nothing has changed here. And we'll take a look at these three bottom on-chain indicators right now. And you can see that nothing has changed either. And even after this breakout, this was run 2 hours ago after we were already at 100. Oh no, this might be delayed. Yeah, this is at 112K in terms of the price, which is not where the price is. So I don't know what I'm going to do with this indicator. I might take it out. I think it's too slow. It should have been bullish already. It'll probably be bullish if it updates again. And this is at 118K. The way this works is that when the MA is broken by the actual IFP, that's when it'll turn green. But you can see historically it's been pretty good. So we'll see what happens with that one. I'm not too concerned about it. Same thing for this, which is the Bitcoin bull bear market cycle indicator. It's still bullish. It's ticking up a little bit. We can take a look at it a little bit closer. Yeah, so you can see it had a spike because of the price. If we look at the 1 year, it's not even on overheated bull. It's just on bull, and it's far away from being overheated bull, which to me screams that there's still room for the price to run. And if it does follow M2 fairly correlated, continues the correlation, we can easily see way higher prices. So I'm not doing anything. I'm sitting on my hands and just kind of waiting. Last indicator here is the MVRVZ score, right? Bull versus bear market, still green, no changes there, and not surprising either. This one, again, is also kind of slow, but I do like the signal. Over time, historically, it's been really, really accurate. I'm going to keep it in the system for that reason. So we'll get to it in a second. So long-term holder net position and short-term holder net position, nothing's changed. Long-term holders are still buying like mad, which is a great sign, right? Once this reverts and goes into the red, that's where, if you are short-term trading, you would want to take some profits, right? If you do have some leveraged calls or something on like that, you might want to consider taking some off the top. And short-term holders, which is generally retail, is still selling. I mean, we're now in a different world because we're in price discovery. Bitcoin has never been at these prices ever in its history. So it's going to be like the wild, wild west out here for the next couple of weeks, in my opinion. We'll see how high this can actually go. Long-term holders, short-term holders, SOPR has spiked, which is not surprising, obviously, given we're at all-time highs. Not too concerned about that. This is the chart that I did want to call out because it's kind of funny to me. We just broke all-time highs, and this is a chart of retail investor demand. And you can see it's still in the red. It's completely like retail is not here. It's totally quiet, yet price is broken out, right? So regardless, that's a good sign. I have been considering, this is one of the inputs I've been considering for the sheet. So we'll see once I'm done doing some back testing, this might get added, the realized price short-term holders chart. We'll see what happens. And shout out to Martin. Great stuff. Also, Axel Adler Jr. If you don't follow these two on X, definitely give them a follow. They not only post amazing content, but actually do the work to do a lot of these charts and indicators for crypto quant. So shout out to them, and shout out to Checkmate as well for Check on Chain. I use his stuff all the time. If you're not looking at that, at least once a week, you're behind the curve. So definitely get on that. And I think that's it. Next week will be a big week. The momentum is bullish. So we'll see what happens. I hope you enjoyed that analysis. I do these every week on Friday without skipping a beat. Come along for the ride. And if you enjoyed that, definitely hit me up with a subscribe for my small channel. I'd really appreciate it. Thanks for sticking around with me. Otherwise, again, hope you enjoyed this and have a great weekend. Thanks for watching.